Hey everybody, Eddie here. Just going to do a market update for next week. So on Friday we had a pretty interesting day. We were expecting it to break down 3,900 on Friday. Just wasn't expecting a big gap down, which happened pre-market. So all the action was done pre-market, and then for the rest of the day we kind of just drifted a little bit, and then it came back up towards the close. So if you look through, this is the 10-minute chart. So at the open, we pre-market, we gap down, we came back, we test this 38.40. We found some footing, we retest the gap, and then we made like a double bottom bounce, and we just closed right at the gap, where just slightly above the gap where we opened. So for next week, we do have FOMC coming up on Wednesday. I don't suspect that we will come down any further till FOMC is over. So I am thinking that we could get a bounce here and get a reversion back to the mean, which is towards that 8-day moving average for FOMC, right? And then FOMC, depending what JP will say, we going to either gap up and continue higher, or we're going to come down and we're going to test this low of July and perhaps the low of June, right? July low, which is around 3,700, is about 2 standard deviations away from the mean. So that is the area where I'm looking for about support. And then if it comes down any lower, it's going to come down to about 3 standard deviations, which is just slightly below the June low. Right. So those are kind of your targets for short term on the way down. On the way up, you're looking about 8 and the 21-day moving average again. So if we come back and we test the 8 for Monday and then Tuesday, we would come back up and retest these levels and maybe hovering around these levels until FOMC happens, and then we get a more clear direction. Momentum is on the downside. So we're about below zero on the daily and as well as the weekly. Momentum start picking back down. We actually had an outside week after we have an outside week last week on the bull side. Now we have outside week on the bear side. So it's been very volatile. So it's been great for us day traders, but not so much for swing traders, right? So currently we're still not swing trading. We did try a few positions and lock in a little profit, and then we try again, and it's not working again. So what's happening right now is that it is towards the more volatile season. September tends to be more volatile, and that does tend to have like a bearish bias for September, just seasonality wise. So we're midway through September, and if we do pick up momentum on the downside, I suspect that we'll get like about a month time on the bear side, right? Just towards about mid October. By mid October, we should find a bottom, and then hopefully we get our bounce, and let's just call this bear market to be over, right? If we do come down, like I said before, we're looking at this pre-COVID level right here around 3,400 as your major support area. But on the way down, there's quite a few support zones. So we have the July low, and then we have the June low. But once the June low has been taken out, this little peak right here is a support level as well, right around that 3,600. And then if that breaks, then we're definitely coming down and test the 34. So 4,400 is the target. But I mean, if momentum picks up, we come back down to as low as 3,200, right? So you just have to prepare yourself for that type of situation. So if you do have long positions, it's good to hedge it for at least for the next month, and then just hold on to those hedges, and let's see what happens, right? If we go up, it's fine. Your stocks that you own should do better than your hedges, so it kind of even out that way. But if you hold long positions, you should always hedge them in these type of environments. That's why I prefer to go cash, because hedging is pretty expensive to do. And we've been cash for I don't know, like majority of this year already, because we trim to go cash in November, and then I think it was around January that we go 100% cash. So and then we've just been trading ever since, right? Okay, so let's take a look at some stocks as well. Let's see what the big tech's doing. So let's go with Apple. So Apple coming down. We have a big outside week right here on Apple. So these are never good. These are usually bearish setups. So the Apple, if it doesn't hold, it can actually come back down and retest these lows. If it does come down, I do suspect it might hold 145, and then if it doesn't, we're looking at about 135. So and it is coming down to a Fibonacci level. So let's take a look. Yeah, it's right around 0.618. So there potentially be a little bounce right here to retest 160 before the drop, right? Like I said, everything depends on FOMC next week. So everything's set up for to go either direction right now. AMD, same thing, it's a double bottom area. I suspect that we will hold this area until FOMC, and then we get either a major breakdown or we get a major bounce up, right? So, and this is a very, very important level for AMD. So if it actually breaks below the June lows right here, it's a long way down. Next major support, $50. So, if that happens, buy it down here for the longer term if that happens, and just hold it in your long-term accounts, right? In your retirement funds or wherever, just buy them down at these areas if it does break down. This would be a nice area to sell a put potentially down at $60, just to grab the shares at $60 and just hold on to them. If it doesn't work out, just collect the premium, right? So that could be a play that you can do on AMD, because I think down at these levels is a steal between this zone right here of 47.58. So they're about $10 in between. That would be a very good buy zone to get into the stock if you really like the company, and AMD one of the better chip companies to get into. They're taking Intel's market share every day, so it's going to be one of those main players in the chip industry. So all right, let's go with Amazon. Amazon has a gap down on Friday. It made a lower high and now it's a lower low. So that's a bearish pattern. And it is like on the weekly, it is an outside week as well. So everything's set up to be coming down to test the lows of June. So yeah, so keep a watch on that. And if it does come down to about $100, it's a good entry point for longer term. So if it does come down $100, this is a major support level. So this is the zone right here, right? This is your major support zone. So it is between 80 and $100. If you come down to $80, it's a steal. And you can definitely go into it at 80 and just hold it for longer term, because once the market bottoms, these stocks come roaring back. So it's one of those things that you can hold in a long-term portfolio. If you only have one portfolio, you can trade it. I would sell puts and then you can wheel it that way. On only down on the zones down here, not up here, down here. So if you come down to about 110, you can start selling the 100 puts or the 90 puts to take position. You could go a little bit longer dated, probably end of October. And just collect a little bit of premium while you wait for the stocks to come down, and then potentially you can grab the shares there, right? Meta skipping. Google. So Google is at the lower range. It did break the low of June, so that's not a good sign at all. It is testing this level right here. This is a very important support level. So this low at $100 is a major support. And if that comes down, the next major support is down here around $85, $90, right? So this is the area that this is the last support zone, and then there's this, sorry, that's the last support zone, and then there's the medium term support zone right around right here, $88, $90, $85 to $90, right? So this is the area you want to take a look at if it does come down, to get into it, and then you plan another leg down here to average into the trade. And this is like, again, this is for longer term play, since there's no really short-term swing trades. If anything short-term, I would depends on how it goes with FOMC, but if it start coming down with FOMC, I would short the stock. I would short it down to $90, and then I'll switch and then buy some shares at 90. So that's the way I would trade it. But right now all we're doing is playing the index, and that's the easiest way. That way we don't have to monitor so many different stocks, and it's been very profitable to do it that way. So that's all we're doing for now. Like Microsoft, same thing. We have the June lows. This is a major support area, and like I said, if that breaks down, we are looking at around around 220, right? 220. There's some support 230 right here, but majority of the support's around 220. So that'll be the area I'll be looking to get into some positions for longer term as well. And these are the type of stocks that you can hold forever, really. But I do like to get them at deep discount, because if I am doing this, I'm only doing this in my longer term account, because I make most of my money swing trading and day trading. So the longer term is just for capital preservation. So you want to get them at deep discounts when you can get them, and then they can grow much faster that way. All right, so NVIDIA, major support. If NVIDIA breaks this level, I say about 120, 125 level, it's coming way down. It's going to come down to like $70. That's about half of what it would be. So you want to be very careful holding NVIDIA longer term. You want to hedge this definitely. You do not want to see it break this zone right here. If it breaks this zone, it's done. It's coming way down here. So I'm going to actually set an alert. If it does come down here, I'm buying. But yeah, so this is a major support around that 120. If it breaks down, you better hedge your position if you have it. If not, you can short it down to $80. Tesla. So Tesla's actually been holding fairly well. We had this base breakout right here. It came up, it came back down for a test of the 50-day moving average, and then we jumped back up above the 8 and 21, and it's just holding right here. Is consolidating. This is still a box range that you're looking at right here. So break above the box is going to go up to test the highs. Break below the box is coming down to the lows right here. So this is the way you play it. And in between, like you can just jump around in between to FOMC. But it's looking fairly good. Like on the weekly chart and on the daily chart, both is in like a little squeeze. So if there's a move coming, it could be a fairly good move up on the breakout of 320, right? So if FOMC is good, you can expect this stock to come all the way back up to around that 350, 360 zone. There's some resistance at the lower here at 330. But once that breaks, it's coming all the way up to test the highs right here between 350, 360 area. So that could be a fairly good range to trade with. So just set your alerts as soon as it breaks around 320 would be a good way to do it. I'm gonna set it right here, just break the top, and then I'm gonna set another alert at 320, just slightly above. That way it gives me confirmation that it's going to continue to go higher. Right, and that's pretty well what I'm looking for on swing trades, and I would stick with the bigger names for swing trading for now. There's a lot of the high growth names that are set up for breakouts, but those names are you have to be very quick and monitor it on a daily basis if you're going to trade them, because they move really fast. They go up like there's no tomorrow, and then they come down just as fast. So you have to be very careful on those high growth names. The large mega caps is what I would be concentrating on the recovery trades, because they're more sustainable, right? So if this market bottoms, those stocks tend to make very good moves, and they're more sustainable, staying up with the trend, right? Where growth names, they'll fly and then they drop really hard. So that's why you can trade some of the growth names if only on a technical basis and it breaks out. But I would stick with the mega names if you want to keep your portfolio with less volatility, right? Anyways, that's it for this week. Make sure you like, subscribe to the video, and I'll see you guys next time.